ISIS has called for its supporters to carry out attacks during Ramadan. ISIS made the same call last year during Ramadan. There were a lot of people on Twitter who took up that call. You had the Orlando.
Good evening, Stella. We and the engineer. My engineer. Good evening, sir.
Yeah. How are you, sir?
I'm good.
How's Cameroon?
How is Lagos, sir?
Lagos is cool with Lagos.
Yeah. Charles, the landlord of Abuja. Mr. Charles, how's Abuja? You can unmute yourself. Hey, the Paramount love you. I'm having full house. Madam Faith. Abuja, Charles, Abuja. Uyo, you want time himself. Wow,
I've been enjoying myself on the Elliott Wave class. It's very, very wonderful.
Wow, you're welcome, sir.
Good evening.
Good evening to you, sir. Raviu, which state are you? Yeah, Deborah.
Hello. Good evening, sir. Raviu is from FCT Abuja.
Abuja?
Yeah.
We met last month, my last trip.
No. I asked you last time when you told me, was it not last week that you were coming to Abuja? I asked for the training center in Abuja and the training house, trading house.
Mr. Charles is here. He's the paramandola of Abuja Trade House.
Okay.
You can private message him. Just get his contact.
Okay.
Charles is here. For Lagos, for Lagosians, we have Mr. Engineer Labi here.
Mr. Day is also from Lagos.
For Rivers State, I know we have Deborah here in the house. She has to start off a center in the Rivers. Deborah, you must become a leader very soon. You should be able to gather people in Rivers State. Sam is with you. The two Sam, Nwanta and Sam Diffreg is with you. So you had already been made
Well done, boss.
Thank you, sir. Good evening, sir.
Good, Papa. How is Cameroon?
Cameroon is fine. I'm here. I'm having language barrier, but I'm trying. At least I can greet bonjour, can greet bonjour. Comment allez-vous? Très bien, merci. Et vous? I'm trying. You need to see the beauty that in the class, I have to be speaking and wait for someone to interpret. It's like preaching. Yeah. Just give me a preaching scenario.
Sorry.
Thank you very much. Let's see how we can start because truly speaking, that last presentation, I was so stressed out. I was having headache. I was having a sleepless night before that night. I was not obvious. Immediately after this presentation, I left the computer. Nothing was recorded. Nothing was recorded. Nothing was saved. So let's see how we can start this one now. Let me mute everybody. And you can unmute yourself when you want to ask questions. Let me reduce the noise by muting everybody. Let me reduce the volume of the television. I don't have access to Bloomberg TV here. I'm watching CNBC. I'll try calling the reception if they can give me Bloomberg. Even at that, I'm not bothered. I have my Bloomberg channel here. I have my Bloomberg TV here. You can also, I think we have been using this channel on the browser since before the trade house in Abuja was set up. And Mr. Charles discovered something in Abuja that made me to wow. He went to Start Time and bought Start Time. Am I still connected? Hello, am I there? Are you still hearing me? I have internet.
Yes, I hear you.
Okay.
It went off for some time, but it's back now.
Okay, thank you. I have two internet sources here. Let me share you. Let me share my screen. This is yeah. You can join in. You can use Bloomberg TV on your browser when you are not with your television. Hope you can see the screen.
Yes, you can see the
That's Bloomberg TV. You can use it on your browser anyway. I think they have an app too. We cannot do without this channel. We cannot do. The worst scenario here, I'm using CNBC. Using CNBC. I was using CNBC throughout the news of Friday. CNBC is what I'm using here, and I can't look at any other channel because I've searched for Bloomberg. I can't see it. So what I wanted to mention was this: that in Abuja Trade House, Mr. Charles went to buy a StarTime decoder and discovered that we can actually have a television from StarTime at once. So he bought the, sorry? Okay, sorry, I have to pause. I have to pause the TV while we continue. So he went buying the StarTimes decoder and discovered that we have StarTime TV, and it was cheaper having a TV and with 200 and something channels. Because of Bloomberg TV, I think StarTime is cheaper than DSTV. For those of us that are trading, you cannot do without the news. You have to use the news to make money while looking at the charts. I'm not teaching you to be a one-sided trader. Balance is the key to life, and you have to strike a balance by accepting the fact that foreign exchange market is a three-leg table, and the three-leg table cannot stand without each other. That's why you must consider, number one, the technical analysis, which has to do with your MT4, technical analysis. Any system at all you are using to trade technically, and you must acknowledge the fundamental analysis. There's no way we can do without a fundamental analysis. Otherwise, that you will be surprised that your trading system that you've been using to make money could embarrass you any day, and you think it's bad. You can change that system. No, you don't just change trading system like that. You should know something is happening around. Maybe something is coming up. Maybe something has just happened, because the fundamental analysis made us to understand that it is driven by two different departments. One of the fundamental analysis has to do with the economic activities globally, which had been calendared. It has been calendared. You can have it at forexfactory.com. There are other calendars. You would know them one by one. And I'm happy for the Forex industry. Everything about Forex is available online anytime. You can go look, just search, just Google. You have anything. You have the information. So the fundamental is divided into two: the economic calendars, which you know that on Wednesday 14th, FOMC members will meet. They will have a press conference after the meeting. They will discuss the interest rates of America, which they want to raise. And I think with all amount of certainty from speculators, they are very sure they will raise, which may not. But what happens is that we will know by then. And also, the members of the committee, voting members, are going to give their economic projections looking at 2 years to come about the US dollar and the US economy. So these are the things that we need 4 times a year, every 3 months. Second quarter, third quarter is coming September, and the last one. So these are the things that gives strength. These are the things that make strength to turn. And this always comes at when price is either at a major resistance or price is at a major support level. And price will keep hanging around that support or resistance level, waiting for this kind of fundamentals. The number three, the second part of fundamental, which actually nobody prepares for, is called the breaking news. So as far as the breaking news is concerned, you cannot tell. So at that level, your risk calculation should be perfect. At no time should you forget about risk calculations. At no time should you forget about managing open positions. At no time should you trade without a stop loss. And please take note, don't manage stop loss. Let the number of pips you are risking in terms of stop loss determine your lot size. Don't have a fixed lot size. In fact, that's the best answer, best advice. Don't have a fixed lot size that in my account, I'll be using 1.0 lots because my equity is this. No. Your lot size is determined by the number of pips you want to risk, because you must determine what you have as fixed. Let me put it this way. I'm still doing that under fundamental analysis, why we use a stop loss at all, why we do the risk calculation. What should be fixed is what percentage of your equity do you want to risk? That one is okay, you can fix it. But don't fix stop loss. My fixed stop loss will be 50 pips. And also when I enter trade, I must fix stop loss at 50 pips. Don't fix lot size. My account is $30,000 as such. My lot size cannot be less or more than one standard lot. No, don't fix them. Fix the risks per trade on percentage, so that at the time you are selling, 15 pips below the resistance, you did not see it while it was at the resistance. You just saw the price after it has already left the resistance level. It can retest that resistance. And when it retests, we call it double top. It can retest the third time. We call it triple top. It has the liberty, price has liberty to do whatever it likes doing between a support and a resistance. You cannot tell. You cannot tell that it must come back now. It can go back. It can do anything. As such, when you are selling, your stop loss must be outside the resistance. Above. In my classes, for those that have been into a live class with me, I think we have 10 pips above resistance level for stop loss in selling. And in buying, we have a little bit wider than selling because of the spread. When you check on your market watch, you'll see that there's difference between buy and sell, bid and ask price. There's difference. That's why we add the extra 5 pips in buying and 10 pips for selling, then 15 pips for buying below support. When you know where your stop loss is going to be safe, you now measure the distance between your stop loss and your entry price. And now see that this is 150 pips. The last trade was 30 pips stop loss. The last trade was 15 pips stop loss. The trade before this one was just 10 pips stop loss. A trade before the one and before this one was 50 pips stop loss. And a trade with 100 pips stop loss cannot be the same lot size if you are looking at risking 2 or 3% of your equity. So get the distance between your stop loss, which your stop loss must be very safe. What I'm saying is this, that your stop loss must have where it's protected. Like someone finding someone trouble, and each time the person wants to revenge, he runs and stands behind somebody. Let your stop loss stand behind somebody. And the somebody that your stop loss should hide behind against price should be support or resistance, either diagonal or horizontal. But I want to tell you that the horizontal support and resistance is more honored, more respected by price. Price does not toy with them. That's why if price breaks a support or breaks a resistance insultively or without any respect, it has to come back and say sorry and apologize. Just accept it that way. I want you to see price, I want you to see trading as simple as that. If price day tries and breaks support without consolidating, without clustering around the negotiating to pass, it breaks, it must come back and consolidate under. It must come back and cluster under. That is what I mean by breakout and retests. So I'm just saying it's like someone insulting an elderly person. You must come back and look at how to make peace before continuing the trend. That's why breakout strategy, the safest, is you wait for a breakout and a retest. So at this point, your stop loss, don't manage it because of the fundamentals. Then let me take number 3. Number 3 is the sentimental analysis. You have to know the sentiments behind every economy, the relationship between US and Germany, why did Trump want to quit the France agreement on climate change, and what effect will that be? What is the relationship? What is going on? What is the challenge? What is the sentiment between Euro and US dollar? You can Google for it. Market sentiment, Euro USD. Start, read. They are there. You don't pay money. Market sentiment. Read about. You must know. What I mean, you must know that product. That's why you can actually be a master of 1 or 2 pays. You can stay there as far as you are familiar with every news, every information, the sentiment behind these 2 economies that you are trading on. Remember, we are buying and selling. And in buying and selling, you must exchange something for something. If you are buying US dollar, you have to either give out pounds and call it US dollar, or you give out naira and call it US dollar, or you give out any currency you are using. You must exchange a currency for a currency. You must exchange another money to receive another money. That is a strategy. So sentimental analysis, you have to be aware of the sentiment behind the products you are buying and selling. Then number 2 part of the sentimental analysis has to do with your emotions. Your trading system may not be bad, and your trading system is not bad. Any trading system that gives you the trend, any trading system that detects and respects support and resistance, which are like natural laws of the market, the law of supply and demand, any trading system that respects supply and demand, respects trend, any trading system that can tell you when to buy and when to sell. Not just waking up and start buying. People don't buy like that. If you buy at the wrong place, you are wrong. You sell at the wrong place, you are wrong. Someone said his trade on USD CHF was still negative. He's praying for it to come back to positive. And it was so surprising to hear that. Because he entered at the wrong place. He said yes, because he closed the first one and entered again. Where did you enter again? Was it at entry price? Something must tell you to enter. So your trading system is able to tell you in and out. Anytime it tells you in, you go in. It says out, you go out. There's difference between a trading system and a trading strategy. Your trading system can be such that could diversify and give you different strategies depending on different market conditions, depending on time. When price consolidates in a shorter or a smaller channel range, smaller range of consolidation, some trading system has a strategy for that. When a price is ranging in a wider range of between support and resistance, some trading system has strategy for that. Then for disciplined investors, they don't try any strategy they are not familiar with. That's why no matter how expert you are, you still need a demo account to keep trying new strategies. That does not mean you must have different trading system, 5, 6 of them. You'll confuse yourself. And at this level that we are starting this, please don't make the mistake to go back to what we are avoiding at hand. Don't go back to indicator trading systems. Don't confuse your charts. Don't confuse yourself. Trading is too simple. This is what I said in the last presentation, which there is no video. Keep it simple. Now, this is like an advice. The Forex market we are trading, you and I are known and identified as retail traders. Meaning that as far as the market is concerned, we have a say, but we do not have much say, and we cannot turn entire retail traders globally, even if we have a union, cannot trade against, cannot move the price. We cannot withstand the institutional traders. The institutional traders are the movers. And when price goes against them, they have their way of taking it back. They are there at the top. We are retail traders. So all we do is we keep monitoring them, check what they do. And for people that had worked with institutional traders before, they have the insight. Few of them I know, when they come out, they try to tell people how it is done at the inside, but they may not be able to speak all out. I don't know if there's anything that makes it like lawful, but I know that if you go through the research on internet, you see that in most years, most times, participants in the market had been sanctioned, suspended, fined. Check out, you see. So we are trading, and we have the institutional traders trading. When you hear Mr. Chris Terry say he had been in the business for about 22 years, he had traded for institutional traders, he had been an institutional trader, he just decided to bring this thing from the Wall Street to the Main Street, just looking for a way, hiding under network marketing, to bring this important knowledge to you. And if you value experience, you will not play with daily swing trade that comes from his desk directly. And I have never seen any swing trade that comes with less than 500 pips. Take profit before. More always comes either 500 beyond 1,000 something. And it means that you have to follow that trade. And if you take only the daily swing trades for a month, you can make 1,000 plus pips. That is how institutional traders trade. So now if we know that we are trading against the institutional traders, I'm talking about the market sentiment now, the politics in the market. What you should learn, what we should spend our money in learning, should be to learn to know how the institutional traders trade. By the time we try to know how they trade, that will help us to plan and try to play along with them. That's why most people research. I think every Wednesday, there's a report that comes out called the COT report. Has to report about the institutional traders and activities, their decisions for last week. In the retail traders are always keeping their ear listening to when the COT report will be out. They want to know what the institutional traders are planning next. What next? Body language. Now I have told you that there is nothing else. Forget about any education that wants to confuse you. They trade nothing else than support and resistance. They trade nothing else than price action. And they believe in the natural laws of this market, of life generally. How do I put it? I mentioned that the Elliott's, the Fibonacci theory, the sequences, and one other system which the Westerners researched to find, which was not allowed to be given out from Asia. That is called the Ichimoku trading system.
Okay.
Became a massive hit. I think my internet just disconnected and connected again. Are you still hearing my voice?
Yes, can hear you.
Okay.
Yes,
Thank you. So I'm done with that one. Let me show you. Let me type what I was saying next. One is the price action. Price action. Candlesticks gives us the information. Look at the candlestick, you can tell exactly. Hello? I can't hear you. We are lost for a while. Am I back? Hello, am I back?
Yes, you are. We're hearing you.
You're back.
You are back.
Okay. Thank you. Let me share the screen again. So the institutional traders, they trade with these tools, and these are the tools you need to learn. What's happening here? Text. How do I do that? Text. Okay. Price action. Want to type here. Okay. What's my problem? Audio out. Screen freeze.
It is back.
It's back.
Yeah.
I'm using the hotel internet. It should be strong. I don't want to change to Vodafone now. I have a second internet, but it's not showing here. Let me just manage it that way. Let me not go to it. The price action, the medical profession has their way of communication. They have their language. They write it. A novice cannot read. We have our own, the candlestick. It is called a Japanese candlestick. It gives information. It's telling you something. You should learn the language of the candle. Learn the language. You cannot do without that language. There is communication. It's believed, in fact, a candle, seeing you open empty for, expect that you understand what it's saying, but it's surprising that you don't understand. I don't know how you feel if you tell someone something and that person refuses to listen and that something happened to that person. I don't know how the candles, if they have a way of meeting, they will be discussing us. They'll think we are stubborn because they tell us what next. Number two, what the institutional traders look at is price action. Number two is the laws, natural laws of life that has to do with the laws of supply and demand, where here we call it resistance
And support.
and support. Resistance and support. Number two, resistance and support. And number three, they would now look for a trading system that can tell them about the trend, because in this industry, the trend is our friend. Please always quote that word, the trend is my friend, so you will not make mistakes. Any method, any system, anything that can help you detect the trend, Please value that system. Yes, supply and demand is a law. When it's called a law, it's a law. There are so many theories propounded, like Thomas Elliott's, the Fibonacci theory, the mark. Most of these theories has to do with trend, has to do with support and resistance. 1, 2, 3 is okay. Number 1, 2, and 3, price action, resistance, and support, and the trend is okay. That's all you need. I don't know what else we should need. There's no other thing. If you want to be an expert in Forex trading, please take it that every other information is just there to confuse you. Maybe there's a committee of persons trying to see that if this thing is commonized, everybody will be involved. So let's not commonize it. Let's bring in big jargons, big things. If you see it that way, you will spend any amount of money and get to know any system that can show you the trend, that can show you, that can interpret. If you cannot interpret the candlesticks, you look for an interpreter. If you cannot identify support and resistance, you can employ someone to come and just identify support and resistance for you. When that is done, it's okay. Stay within that range. Buy low, sell high. Now, the institutional traders, they don't stress themselves. Their trading system is very simple. I heard one Westerner, an American, who was also complaining of, he was also complaining that a set of persons refused a trading system to come to the Western part of the world. So the Westerners researched for it, looked for it, and they saw a handbook on that trading system. But unfortunately for them, the handbook was written in Japanese language. They could not read, they could not interpret. It took them years to study and understand the trading system called the Kimoku Kinko IO, I think so. Kinko, am I correct? Kinko IO. Please, you can check from your system. That should be the correct spelling. I may be wrong, but you can check for it. And they tried to study until they were able to interpret it to English. And even as I'm speaking, they are not sure they have gotten the true interpretation. But that's what they saw. Now, from research, they now also discover that even the Ikimoku Kinko IO is still based on one of the laws of nature that has to do with sequence. Sequence. And some of you that have studied mathematics or art mathematics have gone through a class that sequence was taught. It's natural. Where 0, 1, 0, 1, 1 plus 0, 1, 1 plus 1, 2, 2 plus 1, 3, 3 plus 2, 5, 5 plus 3, 5 plus 3, 2 plus 3, 5, 5, 3, 8, 8 plus 5, 18, and so on and so forth. From this sequence, that Fibonacci had to bring out the ratios. That's why you go to your MT4, you have all these informations there. Your MT4, let me look for any MT4 and share now. Let's see if we can have it. A complete trading system like this, check here, you see, it's not amongst the list of indicators. It's not an indicator, it's a tool. We're not discussing indicators here. We are talking about a tool that can actually have to do with some natural laws, some things that is obeyed in everything. I mentioned it, the Fibonacci ratios. If I'm taking you on a Fibonacci advanced course, I could give you my handout on that. You see that even the face appearance of someone has to do with Fibonacci. The pineapple, the arrangement of those, the skin of the pineapple is arranged sequentially. The keyboard we play, that keyboard, the designers made it through the laws and of Fibonacci. That's why you see the keys arranged the way they are arranged. Otherwise, they will not make it. The same thing is here in trading, and it is made as a tool. Let's check tools. Tools, no, insert. You see complete Fibonacci. Retracement, time zone, fan, arcs, and expansion. It's a complete tool. But now, since you are not an expert, you don't want to study the sequence, how to convert, how to link, you don't just worry. God bless that someone had already done this and put it here, and you have a tool, you can work on it. What am I telling you? The experts, the institutional traders are trading with this tool. That is what they are looking at when they trade. You must try and strive to trade like the institutional traders. You should be able to understand their body language. You should be able to think as they think. You should be able to watch the market and see that these guys have started something. And what have they started? That's their usual thing. As they used to do it, they're about to do it again. And who will tell you this? It's the candlestick. The candle gossips a lot. The candle will tell you, these guys have started it. And merely they start it, you have to be alert. Either you stay out of the market, close partial position, or move stop loss to break even, or move stop loss to stop profit. In case their game starts, whatever they like do, let them do. You must be alert. You should be concerned that we are a minority in this market. Retail traders put together. There's no way we can stand these guys. Rather, we must be ready, watch the candlesticks for any available gossip they have for us. When you have this information, you are prepared. You are prepared. You can't just be taken by surprise. Can't just be taken by surprise. So you need these tools, and I keep telling you, the IML harmonic pattern scanner. Go to the video at imltrend.com and look. It's the introduction has it that it works by the theory of Sir Thomas Elliot, the Elliott wave counting. It also works with this Fibonacci tool. That's why it's able to give take profit 1, 2, and 3. That's why it's able to give stop loss, because it also acknowledges support and resistance. When you are done with the analysis and you see that price is getting closer to a given key resistance, check the scanner, you will see the position already been waiting. A limit order is already waiting there. Merely you get it, go there and check. Because it works with this same tool. It works with these same things. There is no expert trader that you will see him than drawing trend lines, messing up the whole chart with lines, horizontal, diagonal. He'll be drawing lines all over. And we'll be looking at any tool, any trading system that can actually help him identify support and resistance. Now, let me also tell you why Fibonacci, it is easier to understand. Easier to understand. The Kimoku is still working on the principles of Fibonacci. It has its support, it has its resistance, it has its trend. All those red, blue line, there are different meanings, different things. In fact, with the Kimoku, you can tell how long that Euro USD will be buying till the 15th of next month. Some people see someone give you an analysis like that. He's using that kind of system that is able to know that when this thing forms, it must be like 5 candles or 13 candles or 21 candles before a reverse. You can hear some analysis like that because these guys are working with principles that governs the price, even though the price can do otherwise, because we are cautioned not to predict. Trade what you see. You wake up, go to chart, what you see, trade. What the candle tells you, do just that. And if the candle misleads you, you must be able to know that this one is a lie. A soothsayer at times question the spirit that tells him information. Questions, are you sure you're not lying? You should be able to question. The candle can deceive you too. It's game now, it's just happy to deceive you. Why? How can a candle tell you to buy under a resistance? The resistance has been there since 2015. That resistance price has tested like 3 times, and you went there and saw a buy setup, very clean and nice, just 10 pips below the resistance that you should buy. Why should you buy? The candle is playing, the market is playing you tricks there. Immediately after you place your buy, the price turns back because that is a resistance. Immediately after you place your sell, the price turns back because that is a support. The best place to meet price is at support or at resistance. When you meet price at the midpoint between support and resistance, you need a different strategy to go in. That's why if you are in a live analysis, someone will analyze price and now say that where price is, that he is seeing 2 possible scenarios. That one scenario is either down to support before back to resistance, or a second scenario is it can continue to resistance before coming back to support. That is only thing. I would tell you to trade support and resistance only. Don't confuse yourself. There's no game. When price is before the resistance and when price is before the support, you look for 2 possible scenarios, and that will be helped by the information you get from the candlesticks. Please, let's trade Forex profitably. It's a challenge. It's a challenge, one, because IML came and tried to bring everybody together to trade Forex, but unfortunately, some people are not comfortable at trading Forex. They can't learn a new skill. I'm happy for a few of you that are still standing strong. I'm happy for, I know some names. I know people that have even started trading in their trading rooms. I know people that are also encouraging. I know in this team, someone that have just resigned from job because he had able to build his equity above a certain thousand, and he's able to see that he's paying himself salary daily. We started IML together. I know people that does not see the need of paying subscription on IML again because they have learned the whole thing. I know people that are just subscribing to only platinum package because they need only the scanner and the TV sessions. Anything that can help you to build your skill, please do it. Why am I saying so? Because very short, this job we are looking at would not be there. If not for the law that banned roboting everything, I'm talking about artificial intelligence now. By now, so many people will be out of job. Even at that, there's a warning against 2030, and it has started already. Why would bank not lay off staff when a machine is standing 24 hours in front of the gates? When a teller machine is standing 24 hours just close by a shopping mall, at a restaurant, at a hotel, doing the job that human beings were doing inside the banking hall. Now, when machines are able to receive cash and count and deposits, why will bank not lay off? When cameras are able to keep vigilance more than human, recording everything, a camera does not go to ease himself, neither does he feel asleep. A camera has no business than to watch the direction it was told to watch 24 hours, record every information. Why wouldn't there be the layoff? Why do you keep 10 security men when one person can actually stay in front of a computer and look at the screen or sleep off? Even at that, the system will record and keep the information when needed. there will be scarcity of jobs soon. Bill Gates said it earlier, whoever that does not have his business on internet should get it done. Otherwise, you'll be out of business. Very soon, even your company will lay you off. The oil sector, they implanted cameras everywhere. Automation is everywhere. Everything is automated now. Everything, even door blinds, window blinds of houses. People don't stand up to close their window again. They just press button and the window blind covers. So everything is automated. Artificial intelligence is taking over. This is not the industrial age. This market is as old as life. Foreign exchange market is very old. Look the history. It has been there. So now we need to learn and embrace these skills of seeing how hello, am I here? Is my voice back?
Yeah,
Yes,
back.
it's back.
So for that reason, please, let's learn and see how we can do it together. Learn a new skill, and the skill I want you to learn, don't be confused by too many jargons. The market trading is as simple as ABC. Stay between support and resistance. Look for trend, look for price action. But the Fibonacci ratios, the Fibonacci tool has support and resistance already. It identifies them already for you. All you need to find is the trend. And when you get those levels, all you need to do is to look at the candle and find out what information, what gossip does the candle has for you as at that moment. When you discover that the candle is gossiping price, the price may do this or may do that, please don't play with that information. Use it and make money. Either you stay out of the market, or you join the market, or you just enter. So are you afraid to hold positions more than 3 days? The best trading personality is a swing. Intraday traders do well, but mostly they don't survive 90 days because the market readjusts itself. And if your market readjusts itself, you don't notice on time to change your strategy. If the market adjusts itself, you don't notice on time to change your strategy, you are in soup. What is happening to internet? Okay. If I disconnect to connect another one now, I don't know how long it will take. I have a standby internet. What do I do? Should I try it? Let's continue. Let's manage it. Let's manage it. So we need to see how we can trade. See, the market opens on Sunday and closes on Friday, meaning that the Forex market opens and closes every week, not daily. That's why swing traders and position traders stay longer in this business. They stay longer. They can stay as long as their age. They can, in their will. Don't think of willing a certificate of a first bank certificate to your son. They will tear it off. They will just burn. They will not take it from your lawyer. If you want to write your will, forget about that. This age, people don't even need that palm fruit plantation again. It's not industrial age. It is ICT age. People are making money through in technology, anything. Which farm does Mark Zuckerberg, Facebook owner have? Did he plant any rubber estate? Nothing. Technology age has started. That's why children of nowadays, these small boys, these babies, they can unlock your phone without asking you for password. They go to where they want. Because they're born in the computer age. And you are still going back to the old age? No. The world has changed. You have to accept it. So making money now does not involve sweat. Making money now needs you to stay in a very comfortable environment and pay yourself salary on a daily basis. So how do you do it? You have to keep it simple, please. Support resistance is the secret of the entire thing. Unfortunate for us that have subscribed to iMarket Live, we have a lot of tools to assist you. Lot of tools to assist you. Now, how do we use this Fibonacci tool? The market is opening in about 9 minutes. This is a New Zealand US dollar, New Zealand US dollar weekly chart. We start to identify the trend first. What trend do we have? And we check from the monthly chart. I'm just showing you how to identify trend. It's not 15 minutes trend. You can't, why, there's no trend there. There's no trend. The big time frame are the managers, the chairman, they're the ones controlling trend. Those ones you are seeing at 15 minutes are just retracement or just movement in between movements. You must be able to have the bigger picture. You must be able to have the bigger picture. You should be able to see what trend in long term, what trend is this. And we can see that the price is forming higher highs and higher lows. And they started forming higher highs and higher lows from when? From October 2000. Since then, it has been forming higher high, higher low, higher high, higher low. And you are meeting it on when it came to form a higher low and on its way back. That's where we've just met it. And when you are done with this, we cannot take the trade here because we are not position traders. Our equity may not be big enough to help us take trades here. We have seen the trend. Now the next thing is to look for areas of support and resistance. And in that area, history repeats itself. History repeats itself. The tools are here. Horizontal line is here to help you. Former resistance. This was resistance as at 1 year, 1996. 1996. You have to identify them because history keeps repeating itself. Resistance as at 96. And I also teach you one thing. Try to make your resistance and support, meet them, try to meet them at round numbers. I have done this. I want to check any round number available. 7193, 93, if we add 7, it will give us what? 72. 0.72. Let's try 0.72. I like using round numbers. I want you to identify round numbers. Let's see 72, what it will give us. 7193 to give us 72. That's good. 7200. I like round numbers. Resistance 1996. If you don't see it, let me use the cross here. 1996 was here acting as resistance. 2003. It was here, exactly here, yeah, 2005. It resisted here. Remember that price should not touch resistance nor support. So if it touches, it's an insult. It could actually come identify and turn. 2004, 2005, acted as support here. 2011, support here. 2015, resistance here. This monthly candle, remember, a whole 1 month. Resistance here. 2015, and currently we are there. We are there. This is where we are. Currently, we are back here. At this juncture, what do you do? We have seen something. At this juncture, what do? We have seen this level. Let's look for another one before there. Let's look for another resistance. Somewhere here, I've seen a resistance here. For my resistance. Okay, 7476, 7476, 7476, 74. If I add, how do I make it a 0 here? A 0 here. Okay, let's take it there. It has been resistance here. This has been resistance. This is your duty. When you hear someone is talking about chart markup, this is what you do by weekend. Before the market open, you are done with this job. By marking your charts. You do it at your convenience, no emotions. Let's see history as at when history repeats itself. 2005, 2007, support, 2008, former resistance become future support, former support, 2009, 2011, 2012, and now another cluster around here is 2015, and 2016 September price was here, and from this point in the shorter, in the closer picture, you can see that it is forming what? Lower highs. Forming lower highs. We have identified two resistance. If you want us to keep identifying resistance, no problems. We can keep identifying resistance. This is another resistance. It could cut across resistance, 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 support, resistance. We identify them. Now let's look for support. One of the support I had here, 17699. So I can make it 7899, 7899, 7900. Could be 7900. Let's see. I'm looking at round numbers mostly. 7900. What will happen? 0.79. Let's see where it will be. Oh, sorry. It's a mistake there. A round number around here, 68.
7.0. 0.7.
0.7.
Yes.
Okay, let me try that. 0.7. Okay. Yeah, 0.7 is a round, is a number. Resistance, resistance, resistance. So we had a head and shoulder here. Resistance, and price is there. You keep identifying them like that. Your duty is to do this. When we do this, you discover that this is monthly. That's why we are seeing this. Now let's go to weekly. We have a bigger range here. We can identify another one, keep identifying them down. Now let's go to daily. In the weekly, we saw that price was coming down, and from what date? Price is now forming higher highs and higher lows. From 2015 August, price started forming higher highs and higher lows. And what do we see here? Higher highs, higher lows. Back to here, the history as long as what we saw. So now we cannot do, retail traders, myself and yourself, we have our resistance here. We have price at the current resistance. We have lower highs formed here. We have a low lower than the previous low, meaning that the base had scored a point here, low lower than this former low. So what are you looking at? Support blocks us here. So when the market open, what you are looking at is to play either if the market comes back here and the candlestick gives you any information. If it says to sell under here, please sell with your two eyes closed. If it comes back here, it tells you to buy with your two eyes closed. After all, within this range, let's see how many pips. You have up to 200 pips in range. Even if you take 100 pips, each time it tells you to do something, out of the 188, it's okay. You can stay here and buy your house. Stay here, depending on your volume. Stay here and do whatever you want to do until it breaks above and close above this and retest. We now have a new range between here and here, 277, to play along, buy and sell, buy low, sell high. It breaks into this other range. We make money. We don't just play around. Now, it formed a bullish trend here, retrace here, and in the weekly charts, the current trend is what? It's still bullish here. Still bullish. It has not changed this monthly trend. In the weekly trend, we call this a bearish trend. It has caught a low. It has caught a point lower than the former high. So let's see. It could be like this. Could be like this. Could be like this. And we can see that price acknowledged 50%. So Fibonacci 2 has already given you support and resistance. Even where we drew our line, see 23.6%. Where we drew another line here is acknowledged by Fibonacci as 38.2%. We did it off hands. We did not see it. Where we drew this other line, Fibonacci identifies it at 50%. So with the Fibonacci 2, you can have your support and resistance perfectly. Where we drew this one is almost at 61.8%. We can actually move it to Fib because this one has to do with nature. You have it. And our last support is here. The last support for this current trend we are seeing is here at the last level of FIB. The FIB had identified these things. So all you do, as far as price is forming lower highs and lower lows, lower highs and lower low, it has retraced to 50% retracement. It can actually come to 61.8. We cannot stop it. If it comes there, after all, it was there before. After all, it was there before. History repeats itself. After all, it was here before 2015. After all, it was here. After all, it was here. Check the history. 2008. It can come back to 61.8. It can go, keep going. You cannot say it will do this. It will do that. But as far as you have gotten the areas of support and resistance, all you are now doing is to wait for any information, any gossip from the candlesticks. What is the candle saying? When you get this, you are done. Your job is over. When day breaks, you know that you have a space to play up here. You have a space to play here. If it takes up to this point, thank you. We have a wider space to play here. That is as simple as A, B, C. And we say this is A, this is B, this is C, and we are looking for D. And in this scenario, your D could be before 0. You can make your D the normal D, which is AB equals to CD. And what I taught last time, and you can also remember the history we had here, this red line is from the monthly time frame. So whatever game you are playing, don't play out of this range. Whatever we look at selling and buying, you have to remember, you have to wait until the institutional traders break out this before we break out with them. If you don't break out, we keep going back up again. You must acknowledge this support and resistance from the monthly, from the weekly, and this is when this is done, you can go back to daily and have it at a wider range. It will look so big at 1 hour. 15 minutes will be so wide. But now, whatever game you are playing at a smaller time frame, remember that these guys here are there, these levels, key levels. When you get this, you can go to any time frame and do your game. Go to any time frame and play your game. Don't joke with the game of making money. There's a place you see trade, a price, and you tell someone that at this point, you don't have a say. You have to wait. And at that point, market is open. Check your open position. Is there any gap? Do we have gaps? Sorry. USD, JPY. Where do I have pounds? Pounds had gapped down. That is fine. What is Euro USD doing? Sorry, the market has opened. We have to check what the market has as a gap. Euro USD, what have you done? Gap up. It has gapped up. 1 hour. Okay, it has gapped up. Not stress. It has not broken any rules. Still having lower lows, lower lows, lower lows. So let's see what will happen here. And at least the gap will be filled up. This is an old line. The market just opened. When you finish drawing the charts, let's continue with our class. When you finish drawing the charts, all you do is to wait to see what the price has for you. And the price will communicate with you through the candlesticks. Now, whatever price tells you to do, provided it is not against the trend, provided it is not against the support and resistance. Always remember that you have to be selling high, buying low. Even if you are selling goods, you travel long distance to a market that you are told that those goods are cheaper. When you get there, you buy the goods there and bring it back to where you can sell higher. That is the only way you can make profits. That is the lesson I have, at least for the beginning of the week. And we have done this analysis. We've drawn the charts. Remember, we had some charts. Let me check old ones. Old charts we drew last. Do I have any old charts here? Old. Old chart. We drew all these lines, not even now. We drew them long time and they are there. All we do is to stay in between them and make money. Old chart drew before now. They are still working. This is an old chart. I've messed up my chart totally. I'm still staying in between here. While I'm here, all I do is to be selling and be buying. If it breaks out here, I'll be selling. You still have old charts. Let me check another MT for old charts. USD CHF gap down, and the lower it goes, the better for us to buy and sell. Let me see. Let me share the screen. Share the screen. Screen sharing. This is okay. This is another old chart that was marked before today. Gap down. The lower it goes, the better for us. What this thing is this? 50%. This is H1. I don't mind, even if it comes to 61.8%, I'll be the happiest person. If it comes back to 68.1, I'll buy again. My levels are here. I'm buying again. I have my resistance up here. Is H1. Let's go to where we can see clearly. I have this. I have 61.8. I have 50% in the week, in the daily chart, and I have this old long time trend line that we are tagging up here. Anything can happen around here, and we are all there watching. So when you finish marking your chart, we are not giving you trading signal, but we are telling you that you can make trading as simple as what you are seeing now. Can make trading as simple as, where is the zoom? Am I out? Oh. Okay, sorry, I was lost. I could not see where I am. You can make trading as simple as ABCD by trying to study trend, study support and resistance, study, look for tools that are reliable. Gap on Euro GBP. Gap on Euro GBP. Have you seen the gap Euro GBP? Where is it gapping to? Let me share. Euro GBP. Where's my MT4? What is happening to internet? Euro GBP. Wow, it has covered already, sir. It has covered already. Just gapping to catch up a level. Let's see. Let's see. Let's see this. Daily. Zoom out. Internet is making noise. Imagine this. We had this fib here. We have this trend line here. This is an old chart markup. So all we do is to be buying and selling. If it comes back here, we buy. It comes back to 50, comes back to 61.8. That will be very better for us. Whatever happens here, and at that 50% being a support, check the history. Don't joke with history. Check the history. This level, 2016, second, third, fourth, fifth, cannot break. So what are you looking at? Now it has, the bulls have just scored a point. Is it a point? They have not. Same level of 2017 January. Same high. That's what it closed last week. And today has opened below that level. So what do we do at 8800? Is a support and resistance level. We cannot do anything at this point. If you were not in, you cannot be in. You have to wait for price action. So you can wait for London to close, or you wait for the whole of Monday daily candle to close to tell you what to do. After you've identified the levels of support and resistance, when price is at the key level, you neither buy nor sell. You wait for information. If it is closing above with a price action, it is closing below with a price action, or if This range of 50, this range, how long, since when? It stays between here and here. See, up and down. When it comes up, it comes down. It comes up, it comes down. It's up again. What if it comes down again? And when will it break out? You cannot start breaking out before the price. You have to wait for the price to break out before. Please, let's not predict price. Let's trade what we see. Don't complicate your system. Make it simple. That is information. I wish tomorrow I'm starting training here from 4 p.m. to 10 p.m. I don't know if 11 p.m. will be too late. We wouldn't mind to check the prices so far, what we have. And I would not want us to miss the services that iMarket Live is offering us. I would not want you to miss it. I want you to ensure that you know how to use these products. Let me check the products. What do we have here? Let's check if we can have positions here. How do I get there? I need the scanner. Where is the scanner here? Scanner. This calendar. Do we have scanner around here? Okay, I know what to do. I minimize the browser, restore down. Fine. Do I have a scanner here? Scanner. Okay, can see it. Okay. That's the harmony pattern scanner. This is what? Australian USD. And this is already in the, this is one of the swipe trade we have. Let me restore it up. How we are seeing this? This is a recent trade we had before the close of markets. And the trade is positive. Whatever happens here, we have our stop loss at 0.7618. We have our entry at 0.7550, which was active. And if you go to your chart, you see that this has an history of resistance, history. Check that level. And you see that it's Fibonacci tool that gives us the ability to determine take profit 1, 2, and 3. How many pips? Check how many pips we are having here. And this alert, I think, is there in the last daily swing trade. The last daily swing trade, 7th of June 7. That should be last weekend. Am I correct? This is 11. AU daily. This is the analysis we had. This is the chart. Daily swing trade. So we have it as daily swing trade. We have it as at the scanner. I don't know the swipe trade if it has given any alerts for today. Let me check the swipe trade. Any alerts from swipe? Who is there on swipe? Any alerts on swipe? 22 hours ago, not there. I think we had something. Okay, we had the same thing on swipe. Can you see this? This was before the market closed. I don't know if the screen, that is it. Still there on swipe on the app on phone. Is there. Is there. You accept or you decline. That is the alerts on your swipe trade app. So if we have our analysis on AU, support and resistance, and we have a trade alert from the swipe, we have a trade alert from the CEO of iMarket Live, someone that have traded for more than 22 years, someone that have been at the other side of the game. Remember, we have this side of the game being we retail traders. Then we have the institutional traders at the other side of the game. Someone that have been there and is out here. He knows the game better than myself. I've not traded an institutional trader before. I've not been employed by any of them. These guys, the strategy is when they buy and they discover that all of us have joined them in buying by making the price to be higher, they will take profit and stay out. And all of us will start going out or hit stop loss, because you place your stop loss at the wrong position. And when they check that we are all out, they will re-enter again. Where do they re-enter? Mostly at 50, 61%. And if they want to play their game smarter, if it looks like we are too much, we are too close marking them, they can allow it to return to 76.4 or 78, any level of Fibonacci retracement. They would not allow it go out between the range of A and B, but they can retrace even to form a double bottom, provided they can keep some of you out of the business. Because the higher the demand, the higher the price. They want to reduce the demand. All of you must hit stop loss because of your small 1 hour time frame, because of your wrong positioning of stop loss. They have the limit. They will stay between A and B and do whatever they like. And when the price is outside the range of A and B, they have changed the trend. They have changed. For now, they have changed. You have to change. You have to understand this is the game. This is exactly what is happening on a daily basis. And they can stay as long as they like in minors, they don't care. Some people are still in trades since the break exits. Some people are still there. Some people are still in trades negative since the Swiss bank depeg their currency from euro. They are there. Negative, they don't care. They are making more money in. Those are position traders. You cannot stay. So you must make the little you can make and stay out of the business and watch them what they want to do. Fortunate for us, the candlesticks is there to gossip, tell you in, out. They are planning to change the trend. The trend is changing. The candlestick is suggesting, it's not sure. It's a signal. Now you consider the signal. If it is at support level, it is perfect to buy. If it is at resistance level, it is perfect to sell. You must consider it. In a scenario where you are confused equally with the sentiment, what is about to happen, what is Trump saying about Eurozone, what is the sentiment between Euro and US dollar, what was Comey about to say last week Thursday? Why Thursday? Comey speak on Thursday. European Central Bank had press conference on Thursday. UK election on Thursday. Some people became confused. They stay out of the business for that day. They have a good trading system, but they avoided the confusion because it was so unpredictable. ECB today, election today, Comey today. Why this guy? Okay, I'm confused. Let me stay out of the business for today. Those that has a wider or bigger picture stayed in. I remember Charles asked me that day, should we stay out of market? I told him, sir, you cannot run away from risk. People that run away from risk cannot be rich. Rather, take a calculated risk. Why do you run away? Because Comey want to speak, because of election, because of ECB. You run away. You have to take risk. I remember during that day, during my presentation on Thursday here in Douala, I left the presentation ground. Before I get to my hotel room, I don't see my trades on pounds again. I checked the history, it has taken profit. That is how to take risk. Calculate your risk and take it. Check our former videos. We have the formula for calculating risk. What I will do at any day this week, I will have another session. I will teach you candlesticks one by one. Last session, I was teaching how to place Fibonacci, but I'm sorry, the video, I did not save it. Today, I've shown you how to place it again. What I thought that day that was different is that I showed you how to take profits using the same tool. Let me use the chart I was using. Let me show you before I end. Let me show you before I end. Where we place the trade. Where did we place it? Where did we place? Yeah. We were on New Zealand USD today. Okay. We place 0, we placed from here on a bearish trend. We discovered, because price was forming lower lows and lower highs, we placed from here to here to find out retracement. Look, take note, we are looking for two things. We are looking for retracement. We have just seen the retracement. Looking for 50% or 61.8% to enter again in favor of the current trend. But we have seen that whatever we need to do must stay in between the support resistance and finally down here, and finally this retrend line we saw on the monthly chart. That is what we are working on. Okay, after doing that, if we are to sell at C, A, B, C at 50% or 61.8%, if we are to sell at C, where do we take profit? This is what I said that day. I delete this. Please take note. That is the second strategy I'm teaching you. The first one I said AB is equals to CD. Now the second one now is, the first one, remember we placed from here to here to look for what? Retracement. Now that retracement is to give us what? Entry. I'm trying to tell you how to determine your entry and exit now. Don't just enter. You must enter at where you should enter. Now with the Fibonacci tool, you can now determine that since this guy is going down and up to this point is now coming up, and I don't want to buy, but I'll wait to sell. Where will you wait to sell? You can come and place a sell limit order at 61.8. Listen to this. You see the harmonic scanner give you entry 1 and 2. So you could say entry 1 at 50%, entry 1, EP1, EP2. EP1, EP2. Sell limit 1 and 2. Take profit 1, page 8. Take profit 2, 23, and take profit 3 at 0.00. He does not even want to extend beyond that to go for 161.8. But the normal thing, because he's trying to be conservative, the scanner is conservative. That's why you see trades like pounds USD take profit and was still going down. The scanner does not care. He was satisfied with what it made from that trade. Even during the news on Thursday, the scanner was giving us signals. All the signals it gave took profit. Some passed the take profit. All, none of them. So now take profit 1, take profit 2, take profit 3. But in the other way around, if you want to use the Fibonacci, believing that the price, if it is a lower trend, it must form lower highs and lower low. It means that the next low should be lower than this low. This low is already lower than this low. The next low will be lower than this low. And at that point, this is weekly charts. Weekly, let's take, we place from here, this time the opposite of what was placed here before to have our exit. To have our exit. Sorry, let me use my chat. Use my, where is it? New Zealand USD. Is it the one now? New Zealand USD. Okay. This is hourly. This is daily. Even at daily itself, we have a trend line. We have a bearish trend here already. The trend line here already. But we were there weekly. At weekly, we place this. We placed this. From what year is this? 2014 high. High of 2014 July. This is weekly, okay? 38.2%. The 50% was here. 50%. Possibility for us to have 61 is there. This trend line on the daily chart we just saw, connecting this high to this high, projected into the future, is also there. We have this, that we have lower highs. We have a low lower than the previous low at this 23.6, 23.6. Now we have gotten our entry at 50%, being former level of support and resistance here. And if we are selling from here, what do we make as our take profit? If we are selling from 61.8, how do we get these two have given us a retracement level where we can make our decision to enter. Now, how do we decide to exit? First one is AB equals to CD. AB equals to CD. The distance between A and B would be equal to a distance between C. If C is at 50% or even C is at 61.8%, we should be conscious of that is possible. So if C is here, our exit, our entry is there, and our exit will be at this price. About this is a projection game. We have a projection of possibly way to take your profits. About here, let's check. Yeah. About there, let's check that place if we have history. Can you see history? Let's check about here. Do we have history? Can you see history? Resistance, what year? Resistance, 2002. Support and resistance, 2002. Support, 2009. So perhaps price is heading towards there. So because AB equals to CD, we have gotten our entry at the retracement, and we are looking at exiting at the 2009 or 2002 resistance or 2009 support. Even at that, the Fibonacci 2 had given us like take profit 1, take profit 2, and take profit 3. To be conservative, looking at the support of 2004, support 2006, support 2008, and support of 2009. So we are looking at somewhere take profit 1. How many pips from entry? 338 pips. It's okay. Take profit 2, 900. Take profit 3, 1,000. You want to use AB equals to CD, you close all your profits by moving stop loss and now take profit here. It's possible. That's how the institutional trade. We cannot do otherwise and be successful. We have to do as they do to remain successful. It's very simple. I don't see it difficult at all. It's as simple as ABCD. ABCD. That is for entry. Now for exit, either you use AB equals to CD or you place it the other way around. Instead of here to here, and now place it from here to here. I now have my 161.8. You can see that it's the same thing, almost the same thing with AB equals to CD. The same projection. That is it. So this is our given area of support which we want to make profit to. Draw them and keep. Draw them and keep. In sets. Just mark them and keep. This is weekly. Mark them and keep. Let it be there. It's your MT4. You're not paying money for it. Mark them and keep. It may look long, but it's possible. It's possible. Resistance. Already we are there at the highest resistance in the monthly time frame. We are coming downwards, forming another level, down, higher high, looking for 50% or 61. We are now going this way. So far, this is the bigger picture, the projection. Now, how possible? What happens by Wednesday, 14th? What happens by 14th? If by 14th, let's check what happened by 14th. It's possible. What happened if by Wednesday, today is Sunday, no, this is not June 4, it's not this week. Let's check this week. This week. This is Sunday 11, okay. Wednesday 14th, fine. 7 p.m. What happens here? It's possible. What do you think will happen if United States increase their interest rates? 7 p.m. on Wednesday. What do you think will happen? Why is New Zealand USD forming rising wedge in the smaller time frame? What do you think rising wedge stands for? Moving towards the resistance again. What do you think will happen if on Wednesday, these guys, economic projections, the statement, the rate fund, the press conference, read the details, go to forexfactory.com, check the details, 7 p.m. on Wednesday 14th. This is the biggest event for this month and for this quarter, because these projections is for the quarter. Next event will be on the 20th of September. Next will be 20th of September, scheduled 4 times per year. 4 times per year. Next will be 20th. So why are people expecting 1,000 pip movement in USD JPY? Why are people expecting 500 or 1,000 pips? Are you current with your charts? Do you see that we are looking for big things? Why you should not be going for smaller things when the bigger ones are there? When prices are resistance and you see the next support is far like 1,000 pips below. Why are you busy looking for 70 pips, 10 pips? Why can't you, for the first time, now that we want to have a beginning of a new trend, at this quarter, the beginning, 21st of June, will mark the official beginning of the summer season. And we are having this kind of projection this week. Can't you see that we are about to have experiencing either a break of major resistance or a break of major support or a trend continuation or a breakout from any given range that was keeping us for too long in a given region of price consolidating? About to. Something like that happens during these days. Bigger moves. People are already projecting bigger moves. What if it moves against you? Why don't you go professional? Keep the thing simple and go with the trend. You can make the whole of your trades for the year at this news or this period and close your MT4, look for any country to go for holidays. The business is also seasonal. Every business, printers have their season for their business. Event planners have season for their business. You are a business person, your business, you may know that it's seasonal. There's a time you don't even have time. I'm very familiar with printers. They don't have time towards December. Printing every day, every time, no break. There are some professions that when it comes to their season, they hardly sleep at home, working 24 hours to meet up with demands of customers. It's seasonal. That period of stop loss, because we were hanging in a range, or because one was not able to adjust his strategy to meet up with the current market conditions. And that thing we were waiting for, the season, the time, the dates, they are here. Please, Let me not take us much. Let me give you few. Let me just, for those that are not in IML, I would encourage you to sign up IML as soon as possible. Let's see if we have some setups on the scanner where actually could be to be useful to you. Let me open the scanner before I share. Scanner. By next session, I should be able to take you on price action. That is the candlesticks information. Remind me if I want to derail. Should be able to show you the price act, the candlesticks. They are not much. I read only 6 of them, and those six candle formations are very important to me. I don't take any other one. I take only the 6 of them. I named them in one of my videos. This is USD Canadian dollar shark. Let's see, it should be a current setup. USD Canadian dollar shark. Okay, yeah, shark pattern. It's okay. We bought it from last week. It's already buying. It's already buying. Entry price. So we are far from entry price. Just check your, write it down. Check your MT4. If you are too far from the entry price, you can avoid it. Don't enter trades, or you come place your buy limits down here. It's possible to come, or place your buy limit at entry 1, entry 2. This is possible through Fibonacci 2. Entry 1, entry 2. It has to take off already. It can continue. Instead of pursuing the trade, already just taken take profit 1. Instead of pursuing it, come and wait below. That is the advice I would have. Let's check for any other one. Euro Canadian dollar. That one we started on the Friday. I think that was Friday. Euro Canadian dollar had also take off from the entry price, and some pips now in profits. So what you do is you wait below, but don't pursue price. It's almost a take profit 1. Don't chase price, please. Don't chase price. Limit order is better, or you stay out of it. Stay out of it. H1. Let's see H1 USD card. Let's see H1 USD card. A USD card H1. It's already that take profit 1. Gap down, and it's about to fill up the gap. Maybe it's heading to take profit 2 now. So for the week, I think we don't have a new, there's no trade for you to join immediately. Australian JPY, I'm just doing this. The best thing for you to do is to sign up immediately to IML and have access to all these tools. Invalid symbol, are you sure? Okay. Pounds USD, this one I've taken all the take profit, everything. This one took all the profit during the news. This setup was before the elections. That setup was before the elections. It has taken all the profit, 1, 2, and 3. We had this setup in the morning while the UK election was on. I'll teach you candlesticks by next session. Even if it will be 30 minutes, I'll try to give you candlesticks. And I don't know your timing in the day. My timing here is 4 p.m. to 10 p.m. last room session. Then if 11, 12 is okay, I'll be okay with that. And that will be within the week. Any of the days I might come back earlier and less busy, I'll drop a link. We drop a chat at our WhatsApp chat room. At least we can decide on timing there. I'm just looking for, there's no trade for now. We will have trades by tomorrow, by the end of London or the end of tomorrow's candle. The AU, we already saw that one. That one is already on a sell. You can sell it, place a sell limit. If you check the distance from entry price to the current price is not much. You can use the formula we taught. If you take an entry here, measure the distance between your entry price to the stop loss and see how many pips it is. I hope you don't forget that. Measure from entry where you want to enter, measure it to the stop loss. When you get that done, you now divide your risk in cash, in percentage. Risk in cash. Let me use that. What I mean there is that you have a $1,000 equity. You want to risk only 3%, only 2%. Please don't risk up to 5%. 5% is the maximum for portfolio managers that are professionals. Stay lower than that. Stay between 2 to 3% at maximum. So risk in cash, I mean there is, if you are to reach 2% of your equity, 2% of my equity is how much? I have $1,000. So 2% of my equity is $20. So that will be $20 divided by risk in pips. Risk in pips. 20 divided by how many pips between where I'm entering and where the stop loss should be, because stop loss must be at the right place. You don't manage stop loss. Manage your lot size, not stop loss. So when you divide $20, for example, by the number of pips you are risking, say 50 pips, 100 pips, whatever pips it is, just divide the 2% in cash, which is $20 of 1,000, by the number of pips. When you get the result, divide that result again by 10. Divide the result again. Divide the result by 10. 10 is the value of a standard lot. Value of a standard lot. So whatever result you have there, divide by 10. That will give you the lot size you will use in entering that trade. I'm just repeating it. I did that before. Check the videos of the previous presentation. Check the videos. You see the videos at my Facebook page. Try and like my Facebook page so you have updates. This video after now will be posted there. You go to Facebook, search for Alban's FX, Global Services, and like. You see other videos. You can watch them one by one. And you see the video of today. You can watch them, refer your friends to watch them. It's free. We are not paying anything. But if you care, the only thing you can do to help yourself, because after this period, I may not be able to offer you this free service. I'm just doing this as a throwback. You should be able to join us at the IML family, so you will have access to all the offers that we are enjoying in IML. I'll show them to you. We have 7 products here that there's no investor on earth that would not be happy to have these products. There's no investor. Forget about non-traders, but for you that wants to trade, you have this as IML TV. The recordings of this TV, all the events in the TV are recorded here. All the TV sessions. In case you miss a TV session, you have not missed it all again. If you miss a TV session, please come here and see the recording of that session and replay. Missing a TV session does not mean that you have missed what was there. Harmonic pattern scanner, the one I just showed you. The FX signal, this is an auto trader. This is an auto trader. You can connect 2 of your accounts here, connect 1 of your accounts. So IML can actually manage 3 accounts for you, and they have more than 10 traders. You choose anyone that the personality matches your personality. Anyone that his personality matches your personality. Personality, swing, intraday, scalper, position, check any of them. They have their personalities. Choose a personality that matches the type of personality you would like. They will manage your trade for you free while you are learning. That's assuming that that time you are learning at the IML Academy. While you are studying here at the Academy, we have courses from basics 1, basics 2, basics 3 now, and basics 4. Forex basics 1, 2, 3, and 4. There's no how you would finish this academy that you will not be an expert trader. We have technical analysis as a course. we have intermediate 1 and intermediate 2, we have advanced, we have mindset, we have the harmonics as a course on its own, we have the market geometry as a course. So at IML University, I call it university, you have the ability to train yourself, your son, your daughter, your niece, your in-law. You have the ability to expose him to a new skill set that is about to lead the new generation. Making money is now as simple as your handshake. This one is an app which I have it on my phone. I showed you earlier. The app carries even the swing trade now. Whatever swing trade we have posted will be here on the app. So it's one of the app that we have. You must have the app called the Swipe Trade app. It is here on my system, on my phone. You can see the app, and it's just to communicate the signal available in case you want to trade by yourself. And the one I love most, and the TV, where is the TV? The TV is open. I'll show you the channels. The one, you see the scanner? You scan 15 minutes, you scan 1 hour to daily here. You scan all of them that are here. You click on it, USD card 15 minutes, AJ 15 minutes. You click on scan 1 hour to, scan 1 hour to, 1 hour to daily here. Any charts, USD card H4, you have daily charts like the Euro USD daily. Is it there? Pounds USD daily, USD JPY daily. You scan any of the charts you like here and check with your analysis, confirm with your analysis, anyone that matches with your analysis, you take the trade. Then for you not to be idle, you can actually go in again to the TV, imarketlive.tv, 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 and join live transmissions at imarketlive.tv. Let me show you the sessions. Whatever time you see here, we are 5 hours ahead. We are 5 hours ahead. So whatever time in EST, it's like I'm back again. Okay, sorry. Whatever hour times you see here, go to your clock, adjust it by 5 hours. We are 5 hours ahead. So today, Sunday, by 8 p.m. EST, what is 8 p.m. EST? You don't know, I don't know, but we are 5 hours ahead of them. Don't just be lazy. Move straight to your Google and type in 8 p.m. EST. You will have the result. 8 p.m. EST. 8 p.m. EST. Enter. You have the result. Have the result. 8 p.m. EST is giving me in French. Tell them I'm not from here. 8 p.m. EST. Is that what he's telling me in French? Check it on your time. You'll see it what it is. Because I'm in Douala, you don't want to show me my time. 8 p.m. EST to PST, no. 8 p.m. PAST. That's all I need here. What is 8 p.m. EST? Are you searching? It should give you the time, or you just add 5 hours to 8. That would be 8, 9, 10, 11, 12, 1 p.m., 1 a.m. today. That'll be about 1 a.m. at night on Sunday. You will have your Google, they speak French. And I saw I see I'm awake. So you go to, where are we? IML TV. Am I still there? Go to your TV, check 5 hours away. You'll be able to have the, have I closed the TV channel? Okay. 5 hours apart. Our time is 5 hours away from them. We have the basics on Sunday night. On Monday, Trade House, 5 a.m. Nigerian time, New York session, live trading session. Forex 101 course, 9 p.m. EST, 9:30 p.m. strategic analysis. Tuesday, we have wave analysis, Forex New York session, strategic analysis, culture of Trade House, and London live trading session, Trade House. All these are events you join from morning till night, Monday, Tuesday, Wednesday, Thursday. And we now have harmonic pattern scanner room. Harmonic pattern scanner room is starting this week. You join the session, the flyer is already out. I shared it on the group where we discuss the harmonic pattern. In that room, any pattern that is tradable will be discussed, and you will be able to take the trades from there. Those are the offers that could actually help you to be a profitable investor in the Forex industry. Please try as much as possible. Try as much as possible to remain profitable in this industry by giving it the right approach. The right approach, it demands you to be studious. It demands you to have an investor's approach. Don't come and try $200 and see. $200, even if you are making 50% ROI, cannot pay your subscriptions, cannot pay for your internet, cannot pay your house rent. So people that are trading for a living are able to pay themselves salary, buy car, build house, marry from Forex. They don't try it with 200, they just want to try it. Why do you want to try it? If we have come to an age that we are able to fund a trading account with as low as $1,000 and you are still complaining, what if the time it was not less than 200,000? You can't own a trading account without $200,000. Why you succeed to fund that low is because you have leverage. Your broker is giving you leverage. So now, if you know you are not up to the age or the caliber of being a trader, don't come and play around in the market. Get ready, approach this business as an investment. Return on investment is the essence of every investment. Whatever will keep you profitable to have a good return on investment, please do it. Don't come and be lazy. Just open an account because someone said he will manage for you. You are done. You don't even check the history, the statement. You don't check the performance. You should change a trader to another trader that is doing well. You should be in charge of your business. Any business that the owner is nonchalant about is not a successful business. Don't come to Forex because others are here. Come to it because you have a passion and wants to take your destiny into your hand. You want to be free. Decide how much you want to pay yourself as salary. Someone asked me in a class yesterday here in Cameroon how much he can make every month. I asked him, how much do you wish to pay yourself as salary every month that can pay your house rent or buy fuel for your car or build? What do you look like as should be your normal monthly income for you to live well? He mentioned the amount and I told him, look at that amount as being 5% of your investment equity. It's possible to make 5%. But if we go for 1% daily, you'll be surprised that you are making 20% ROI in 1 month because 20 trading days, 1% per day. $1,000, you keep making $10 every day. $10 every day. You are doing great. Don't be greedy. Bank cannot pay you that. Even in full 1 year savings, you don't have up more than 12% if it's up to. In fixed deposit with your 20 million naira, you cannot have more than 9 or 7%. You negotiate between 6, 7, and 8%. I don't know any bank is giving up to 9%. And you have an investment with the principles, you can sit down on your own and make 1% per day and you're still greedy? Want to make 100% per day? 1. for 20 trading days. Can you try that and see first? Then you increase to 2. With proficiency, you increase to 3. With time, you can make 5. But don't be greedy. Grow from 1. Count from 1 to 10. Count from 1 to 100. Don't jump. Don't jump. Take it one by one. Start today and make 1% per day of your investment. Equity, 1% of $1,000, $10, $10, $10 for 20 days. You have $200. That is 20% ROI. It's already too big for a return on investment. Show me the investment that can pay you 20% every month. You don't pay salary. You don't have problems with accountability with staff. Let's give Forex the right approach, the way the owners of the industry are doing it. Let us not just come and mess around. Let's do it the way they do it. How could bank trade Forex? Are they trading like you trade? These are people that are trading it big. They are looking at even 3% per month, 5% per month, and you are here making 20%, complaining. Don't give it to someone and forget. Be practically involved. It's your money. Look at it as a business. Put all you have on it. Make it. I'm talking about 1% daily. It's too simple. 2% is possible. 20%, $20 a day in 1,000. What am I saying? If you cannot afford to fund a trading account, partner with somebody, group yourself into cooperative society, get a good equity, and trade Forex the way it is traded. Don't deceive yourself. Funding $100 blow. Fund next week $200 blow. Fund last month $500 blow. Total the funding since you started Forex, how much have you funded? Why not give it the right approach? If you don't give it the right approach, that will still be the result. Please put your time. It needs your time at the start. It needs your commitment. It needs your discipline. It needs your involvement, no matter the method you are using. Thank you very much for today. See you in Nigeria soon when I'm back. I'm happy to have you. If I have time late tomorrow night, if I don't have whatever we have, you have the updates on the chat room and on the email. Thank you very much for today. Do I have any question here? Do I have any question here? I've not seen any question in the chat room. Please, if you have a question, you can send to me. I think someone is raising hand. Okay, can let me unmute you. Unmute. Unmute. Have I unmuted you? Let me unmute all so I can get the question. Unmute all. Okay, please ask the question. Any question? Okay, thank you very much for turning up. See you in our next session. It may not be daily again because of my engagement. See you. Bye-bye. I'll drop the link on the Facebook page or on my YouTube page. See you. Bye-bye.